How to pass a 300k standard prop firm evaluation by using the POW Banker EA. This was all done completely hands-free, and there was no trend lines drawn. There was no guessing where the market's going to go by drawing technical analysis and sitting in front of the screen all day. I was simply going about my day whilst this was trading for me in the background, and that is simply the beauty of using the POW Banker EA. Now, when I first bought this challenge, there was probably a higher chance of getting paid out. So if I pass verification and I make it to a withdrawal, I'm simply going to try and get my challenge fees back, so that this account is then risk-free. I know there are people that have encountered problems with their withdrawals with OnlyFunds. But obviously when I bought the account, it was under different management. So it is what it is. You can't really control these things. You just have to accept that with prop firms, there is risk, and that is the game that we're playing. Now, I also bought a 300k HFT account at the same time. And the thought process behind that was simply to try and get payouts from the HFT account whilst I passed this standard challenge. And that's what's happened. I've managed to make my challenge fees back from the HFT account. I've managed to get a couple of withdrawals, and these accounts are now risk-free anyway, even if I don't make it to this withdrawal. But ideally, I'd like to. So I'm just going to talk you through the process. If I was to take this challenge all over again, and I've actually started a ftmo challenge, last week, which I'm trying to, use this same approach, this same process, and I'm going to talk you through it. And that would be to try and get to 2 or 4% quite conservatively. And then when you get there, try and push on a little bit more aggressively to get over the line. Because if you get to 4%, for example, you could set your equity protector so that if you hit it, that you'll still be in profit or you'll be back at break even. Whereas if you try and push too aggressively at the start and end up taking a loss, you're probably going to start second guessing yourself, second guessing your strategy, and you might end up blowing the challenge altogether. So in my opinion, and from my own experience, I prefer to, not be so aggressive at the start because, as I just explained, you could take losses that you don't really need to take. And that's exactly what happened to me in the beginning. So after 5 days of starting this challenge, I actually took a loss, and I put that down to the fact that I didn't have confidence in the approach that I was running. And this is probably the biggest piece of advice that I can give you is if you're going to take a standard prop firm evaluation, make sure you know your process off by heart and make sure you have confidence in the approach that you're running, because I was trying something completely new. I was copying 4 or 5 different master accounts into this account at a 0.3 lot multiplier on each one. And I was trying to get there as quickly as possible, and I ended up paying the price. And after 5 days, I took a loss. I stuck to the same approach because I don't like to chop and change too much. But again, I ended up paying the price. And another 5 days later, I took another loss. And after 10 days of starting this, challenge, I found myself 15k down. Now, most people in this situation would probably try and revenge trade their way back to break even and probably end up blowing the challenge altogether. I've tried to do that before in the past, and it never ends well. So I decided to learn from my mistakes, and I decided to say to myself, I'm just going to try and get back to break even very conservatively, and then I'm going to push on. And I decided to re-optimize just one master account. And I decided to just use that one master account for this challenge. And that was running the double confluence strategy that I've shared before and Darren shared before in the past, which is running a 4-hour EMA and a 5-minute ADX on all of the set files. Now, 2 weeks prior to, attaching that double confluence strategy to this challenge, I had seen slightly high drawdown on that double confluence approach. So I decided not to copy a 100% lot multiplier. I decided to copy over at 0.7. And, that was simply because it was making me feel a little bit stressed, a little bit anxious, and I didn't want to be feeling that way on a challenge. So that's what I decided to do. Now, as you can see, we had a quite, fairly steady equity curve. There were a few bumps in the road, and I'm going to explain them in a second. But I did see a large number of trades during this time period, 5,500 trades. So a really busy account. I was being a little bit more aggressive with, running most of the major pairs, There was a lot of set files running. Everything was split into long and short. There was trend set files. There was range set files. Altogether, there might have been, off the top of my head, 25, 30 set files, maybe even more. But I ended up banking 5% in April and 3% in May. Now, my best performing set file, which I will show you, was this gold set file. I think it was, these buyers. I think it was the buyers on the gold set file. Basically, over the past couple of months, we've seen, gold move quite a lot. There was times when my master accounts were going into deep drawdown because I was running a lot of gold sets. So I decided that when I optimized this gold set, I was going to cap the lot size at 0.1. Most of the trades that were open were 0.01. And that was simply to try and control the exposure that I'd had on other accounts, and try and control the exposure that I could potentially see from gold if it was to move again, and how it likes to move crazy. So yeah, it ended up being a good decision because it helped keep my drawdown fairly low for gold anyway. But there were a couple of days where I woke up to high drawdown. On this 30th of April, I was actually moving house on that day, and I was already quite stressed out. I woke up to 3.5k drawdown on my screen, and to top it all off, it was an NFP day. Now, I didn't want to take a bigger loss than I needed to. I didn't want to hit my equity protector, which was set at minus 10k. I didn't want to go into the weekend stressed out even more than I already was. And, I didn't want to end up back down here and have to repeat this process all over again. So I decided to make the decision to close down 3.5k drawdown. Would most people be able to do this? I'm not too sure. It was quite a difficult decision. I had to ask the missus, shall I close it down? Shall I not? And of course, she advised me what would be the best thing for you to do in this situation. Do you want to be going through this day stressed out? High impact news coming. NFP. We know how NFP likes to move. So I decided to close it down. It ended up being a great decision because I actually saw my master account go into minus 10.5k drawdown. It might have even gone more than that, but when I saw it on the screen, it was at minus 10.5k. I would have hit my equity protector. I actually woke up on Monday with the position still open. I decided to bulk copy those positions back over to the challenge, and I actually made back what I lost anyway. So all was good. And then 2 weeks later, I ended up passing the challenge. So there was also another day, I think it was here again, it was an NFP day. Now there was one set file, and I'll show you. There's the gold set file. Great data on that gold set file actually. But yeah, you can see here, I was running this set file here. Now, usually I cap my lot sizes at something sensible on all my master accounts. Usually one lots. I don't want to see big lot sizes open, especially if, trades open in a sequence and they're stacking up and there's a big move. I don't want to be overexposed. But you can see here, I was running, I actually can't remember re-optimizing this. I can't remember putting this into the portfolio, but clearly I did. 5 lots. Maybe I saw really good data on it and decided to take the risk. But as soon as those trades were open, I closed them, and I took I think it was like a 1.5k loss because I didn't want to see them on my screen. It was causing me stress. It was causing me anxiety. I decided to remove that set file altogether. And then, as you can see, I ended up banking very nicely from then on. So if I was to take this challenge again, I'd probably go with a more reliable prop firm, simply because you're more likely to get paid out if you make it over the finish line and partial verification, you get to your first withdrawal. But I would also try and get to 2 to 4% conservatively and then push on once I get there. Hope this helps. Any questions, leave them in the comments below.